Was this it? Was this the reversal we were all waiting for? Guys, look at this from the peak here. 28% down on the day. And oil just closed the day red, officially minus 6.78% in a time of war. Hey everybody, what's going on? Alan Perez here. And in today's video, we'll go ahead and talk about what's driving oil prices higher and then ultimately lower, pulling that Uno reverse card. 3 new trades that I just took today and how I plan to manage them and what I think could happen from here. So without further ado, let's go ahead and navigate these markets, guys. Starting off with oil, there was a monster close on the open here last Sunday. I remember being at the store here and it just kept going and going and going. From the open, at one point we were up almost 29% here, close to that $120 barrel. We didn't though. It seems like that was the peak, that 120, 119 area, and since then we have since corrected the whole day's open gap, and now we have actually traded below that, finishing the day red, minus 6.78% here. Now the question is this thing going to continue higher, or is this going to be a correction move? I think it's too early to say. There was some things, right, that pushed the market up higher. For one, Saudi Arabia stopped some production in some very key areas. For the first time during the war, there was some like key infrastructure that was hit on both sides there. So that added to that risk premium. And also too, you did have the previous supreme leaders. His son was actually elected, which is not good for the overall theme of the war, right? If his son is elected, then most likely than not, the war continues and things continue to escalate. Specifically, Donald Trump did go ahead and say that he wanted to be personally involved in the selection of the new supreme leader. So those two factors are added to that risk premium. However, there was an emergency virtual meeting on Monday today with G7 countries basically addressing the potential disruptions from oil supply, their plans for the thing going forward. And so you saw a bunch of headlines surrounding that, right? They were going to actually produce or release about 400 million barrels of oil, which will go ahead and buy some time essentially, because, you know, as you know, the whole situation, this whole oil being elevated can cause some elevated inflation globally, right? So countries don't like that. Some countries were already fighting with some pre-existing inflation. I'll go ahead and go into that more in depth here in the video. So basically that headline was positive for the market, right? You also saw some headlines from the IMF, one of the board members on the IMF saying that countries should go ahead and plan for the worst case scenario and be prepared. So I think markets got a little bit of confidence there. And so you can see that in the price of oil, right? The second chart that I wanted to really highlight here is the VIX, right? The volatility index. Basically it measures the volatility in the options market. If it's higher, you can expect some risk off trading. If it's lower, then, you know, things are stabilizing here. And so during the market open, right, you can see that this is pretty much correlated with the oil price. It gapped up open higher and then ultimately faded off here. So you can see that markets are actually getting a little bit more calmer. It's still elevated, right? It's still above 20. It's still above that 200-day moving average here in yellow, but nonetheless, a red day for the VIX, which is a positive sign for de-escalation, for risk on trading, all that good stuff here. Other thing worth mentioning here, S&P 500, I did mention in my previous videos here, if I go to the daily time frame, if we just ignore this latest green candle here, but recently here we've been trading within this range of 6750 support here, and we've been trading higher, right? And I did say if we go ahead and trade below this level here, then most likely than not, the next step where buyers have an opportunity to step in would be that 200-day moving average, or the 6550 support here. We didn't quite tap into that support level, but we did go ahead and tap in that 200-day moving average, and you can see that buyers actually bought the dip here. So we'll go ahead and see if that goes ahead and continues. Definitely a risk on day for equity markets. You can see here for the Nasdaq as well, fell right below that 24,750 level and then traded into this 24,000 level. You can see right there to the T, and then traded higher here, closing above that 200-day moving average, which is fantastic to see when it comes to risk on. Going into currencies here where I am most active, you can see that the dollar index has continuously rejected this 99.500 level here. This seems to be a strong level of resistance here. The dollar has been the leading safe haven against the bunch here, so we seeing dollar down here is actually good for risk on, right? If you see the dollar index, the safe haven at the moment, becoming weak, pretty much indicates that there is some appetite for risk, right? So you're seeing the dollar index down here. If this candle does close how it does, I do think that the path of least resistance for the dollar is potentially lower. I would say the 200-day moving average, where buyers can go ahead and step in here, or this $98 handle here, and you see another wave of headlines of escalation, then most likely than not, this trend continues to the upside, and you will ultimately see something like this, maybe some new structure here to the upside, upside, and this was just one big pullback. If this thing does start to fade off here, then perhaps the Fed can go ahead and continue, other central banks can go ahead and continue on their path of interest rates, right? You have some central banks that were looking to ease interest rates and some looking to hike interest rates. So if you go back to trading business as usual, then perhaps the Fed can go ahead and try to attempt starting that rate cut cycle that they've been trying to achieve this year. The Aussie dollar has been on my radar since the beginning of 2026 for a lot of reasons. They've been fighting inflation, the RBA is looking to hike interest rates, while other central banks are actually looking to go ahead and keep their rates neutral or start easing them. So clearly there's an underlying divergence in central bank policy, and during this whole time of war, the Aussie dollar has been relatively strong here. You can see that the breakout when this thing happened was right over here in the 69,500 level, and we've basically been flat or above that level here. And today we saw a clear appetite for risk. You can see that oil was down here, the VIX was down as well, at one point up in the 35s, now back almost $10 below. Equity indexes like the S&P 500 are green on the day, and today's emergency meeting with the G7 countries showed that although oil can be elevated for a long time, there are some measures to go ahead and fight global inflation. So what I did today was go along the Aussie dollar with a basket of currencies. I went long Aussie dollar, Aussie CAD, and Aussie Swiss, and I was very intentional with those three pairs. Let's start with AUD USD. It has the Australian dollar as the base and the US dollar as a quote, obviously because I'm trying to go long the Aussie dollar but also short the US dollar. Why? Well, the US dollar has been the safe haven during this whole moment. If you start to see a de-escalation, then the safe haven repricing will be showing through the US dollar. So essentially, I'll be trading a strong Aussie dollar versus a weakening US dollar, right? Now that's a speculation. Obviously, if the war continues, then the dollar will continue to get that safe haven bid, and so the trade won't work. The second pair that I went long was Aussie CAD. Reason being, I'm obviously trying to go long the Aussie dollar, but the Canadian dollar has a correlation to oil. If oil does well, the Canadian dollar does well. If oil does bad, the Canadian dollar weakens. With today's price of oil, it obviously weakened dramatically. If it continues to go ahead and weaken, if we see a de-escalation, then the Aussie dollar will continue to benefit off of that. Aussie Swiss, Aussie, I'm going long obviously again, and the Swiss basket as a whole has been weakening for some time. Actually, as the war was starting, the Swiss National Bank did go ahead and say that they were monitoring the strength in the Swiss franc and they were looking to intervene to weaken it because it's just too strong. And so let's say the war stops and we start trading back to the old fundamentals that were driving the market. Central bank policy. When we're trading forex, you're trading interest rates, right? And so you can see the interest rate projections here. You can see that the Aussie dollar in blue is going to progressively get higher, while the other colors, the USD in red and the Canadian dollar in yellow, are looking to go ahead and drop. So that divergence in interest rate is going to widen and make that relationship with the strong Aussie dollar and the other currencies weaker a lot stronger. Another thing worth mentioning, I like to trade in the direction of positive carry. Not only do I like to profit from my trades, but I also like to collect income from those trades. Typically, positive carry suggests a strong trend in that direction. So in this case, I'm going to be going long Aussie US dollar. I'm going to get a slight payment of 10 basis points for being in the trade long. Aussie CAD, I'll be collecting 1.6%, and Aussie Swiss, I'll be collecting 3.85%. Adding those together, I'll get a raw positive carry of 5.52% for every single day that I hold the trade. And not to mention, on the top status page, the Aussie dollar is very strong, with Aussie CAD, Aussie US dollar getting a bullish reading. Earlier, Aussie Swiss was up there as well. And looking at the asset scorecard here for the Edge Finder, the Aussie dollar as a whole is getting a bullish 7 reading, which I love to see. As of now, the trade is working out quite nicely here. And yes, there's a risk that I get stopped out because the escalation continues and you get more risk off trading. In that case, I'll take a defined loss and get some better prices later on. And that's it for today's video, guys. Thank you guys so much for watching. Leave any comments in the comment section below, and I'd like to know your opinion. Do you like my trades, or do you think I'm gonna get stopped out? Let me know in the comments. Thanks, guys. Have a good one. Bye-bye.